Thank you, Mr. Chairman. Mr. Gupta, do you believe that the lowering of interest rates propels the awarding of bad loans?
Just the reduction in premium rates propel
Yes.
the premium rate reduction by itself doesn't propel promotion of bad loans. The guidelines itself could propel bad loans. Right now, FHA guidelines go all the way to 3% down payment down to 580 FICO. Credit agencies that issue this FICO typically will say that FICOs below 630 approximately are subprime FICOs. So layering that kind of FICO with a low down payment does stack risk factors against the loan and increases the probability of default.
Yeah. I always like to remind everyone that that the VA does zero, and they have the lowest foreclosure rate, which I think should be at least taken into consideration during this discussion. Look, one of the things that I think is troublesome, at least, is that at least for me, is that I'm not sure, if there's a concern about FHA having an unfair advantage in terms of business over the private sector, or is there just a general concern for the taxpayers? Dr. Aiken?
My primary concern is the taxpayer. The government shouldn't be in the business of, quote, competing with the private sector. It sets up programs for social goals, and the assistance of low and moderate income individuals to have housing is an important social goal. It should look to achieve that goal and no more.
So do you think that we have encouraged competition between FHA and the private sector? Is that what has just happened?
What I think has just happened is that the FHA has exposed the taxpayer to unnecessary risks by lowering its premium. That's my primary concern. It hasn't, in my view, taken the right steps to restore the capital adequacy, and it has, in the process of lowering the premiums, attracted a riskier portfolio.
Now, when the bubble burst in 2008, and the recovery began, the only car in the garage was FHA. The private sector left. So why would we want to do anything that would make homeowners more or potential homeowners more vulnerable, to prevent them from being able to buy a home? If the private sector left, and I don't blame you for the private sector for leaving. I'm a capitalist. You're in the business of making money. But the problem is who takes care of the people who are being left behind because the credit has been tightened.
Actually, I would, if I could. Mr. Gupta actually said a little earlier that private mortgage insurance actually wound up paying claims of what, 55 or 51 billion, 44 billion to the from the GSEs. So from that standpoint, it's they actually didn't retreat fully from the market, and in fact were there to pay claims during one of the worst periods that we've actually ever faced.
Let me add something.
Ms. Gordon.
It's hard to know where to start, but there were also quite a lot of claims PMI did not pay, and in fact, several private mortgage insurance companies went out of business. There were many disputed claims. There were many claims that were eventually paid, but not at the time they were initially due. So I think you have to look at that to get the whole picture, but I don't want to focus on the PMI. I think the PMI companies are a very important part of the system. I'm glad to see them coming back to strength. And I'd like to see the pricing at the GSEs change so we could have more, robust low down payment lending going on over there too. But the fact is, when the rest of the system failed, FHA was there to prevent a real liquidity crisis in this market. And when you look across the sectors at the bailout numbers, the amount of money we spent to bail out the banks, to bail out AIG, and the amount that we spent to bail out the GSEs, those were huge, huge figures, whereas ultimately, FHA required an incredibly small draw, very briefly, for 1 year. It's actually incredible how cheaply the taxpayer was able to save the housing market. It turned out FHA was a better value than, frankly, anyone had ever really thought it would be.
Thank you.